Alright, what's up traders? Today we're going to be doing a live trading session. It's not exactly live. I had to request that feature from YouTube, but I'm going to be posting this afternoon so that way you can see my trades for today, Monday, October 24th, 2022. A lot of information has been happening the past couple months, weeks, days. Just this weekend we had the Chinese Communist Party break tradition and pretty much assign Xi a third term. That alone has caused the Chinese markets to pretty much tumble. GDP numbers from the Chinese government, which were supposed to be published a couple weeks ago, were actually delayed, and they were just posted this morning, and they're showing an incredible government GDP growth of 3.5%. If you look at the Shanghai index, you look at all these other Chinese market, kind of Chinese market indexes, they are clearly not buying the news from the Chinese government. And so that has been a kind of a general trend with the Chinese government, that people are starting to believe them less and less, and the free markets are going to be continued to be oppressed, which is why you're seeing these dramatic falls in these Chinese companies like NIO and the such. So anyways, well, that's why I typically avoid Chinese companies at all. So I don't trade any Chinese companies. It's 9:30 a.m. Markets just opened. So what I'm going to do today is I'm going to show you I have about $23,000 to deploy this week. I'm going to share with you what I typically do. And so that way you can all continue on your journey and refine your journey into how to make a living or cover expenses with options. I think it's very realistic for you to be able to cover a car payment or cover your vacations or cover a significant part of your life expenses with options with minimal risk. So right off the bat, I'll show you where my positions are. I've got two positions that I'm wheeling right now. I've got Palantir and Oatly. If you want to understand what wheeling is, I'm going to make a video on the wheel strategy. I'll get into that a little bit further. I also have a large position in XXII. It's a small cap company. They have some innovative products as far as their VLN cigarettes, which is a low nicotine cigarette that is the only cigarette to have received FDA authorization. There is some nicotine mandates and flavor menthol mandates in the future with the Biden administration and the FDA, and so I thought this would be a good long-term hold. But apart from that, I have $23,000 to deploy today, so we're going to go ahead and do that. Now, the general market atmosphere is very bearish, as you know. We have the GDP numbers coming out on Thursday. Now, here's why those really won't matter, and this is how we want to trade. Those GDP numbers, the market right now has priced in a 75 basis point hike already with the Fed. That is what the markets expect. That is what the markets have priced in. And so, therefore, anything that the GDP numbers say are either going to confirm or reinforce that decision, right? So let's go through those scenarios. If the GDP numbers come above expected, then it's just going to solidify the Fed's decision to enact that 75 basis points. There's a very low chance that they'll do higher than that. And so a high GDP number will verify that. A low GDP number will simply reaffirm and confirm the Fed's current rate hike narrative, and it'll just put pretty much the wind behind the sails as far as that confirmation. So regardless, I think we're going to see that hike. And so that's why those GDP numbers I don't think will be very significant. But having said that, I like to avoid trading those days just because those are the days that usually you have these big spikes. And so those numbers come out Thursday. So what I'm going to do is I'm going to trade some SPY contracts up until Wednesday. And that'll give us a general clue on it'll avoid us having to trade through those days, right? So right now you can see the market's already kind of a little bearish, coming down. Now for these wheel strategies, the selling calls is where you would need the collateral of the particular stock. If I was to sell puts, I would need to put the collateral money-wise, and so it would just be a normal trade. And so for me to be able to sell these shares, I want the stock to be in a generally positive uptrend, so that way I get more money for my premium. So today I'm not going to trade Palantir. I'm going to wait for this to turn green to then be able to sell my contracts at a higher premium. So let's go over to SPY and check out what they're doing. Oh, and just for general sake here, let's go ahead and look at what our last week's performance was. Last week was a tough week, but we were up 1%, up $350. This last month we did pretty good. Last month we're up 12%, so almost $4,000. And in the past 3 months we're up almost $10,000. So that's almost a 37%. Year to date, 145%, 20,000. And yeah, you can see the year to date. So I started this account back in April with about $15,000. And so this is part of my small account challenge to be able to get this account to $100,000. That is our goal. It's been very difficult with the way the general market is, and so outperforming the S&P has been a challenge, but very optimistic about it. My current positions are a CS straddle, so I did a video on a straddle for Credit Suisse. I think there's a lot more going on underneath the hood, and so hopefully we'll see that explode before November. I have some Oatly calls that I sold. Now the issue with Oatly is that they sell in 5 cent increments, so I won't be able to dispose of these. I'll have to wait till they expire in a month. But regardless, this position is netting me about 3 to 4% in a month, which is a very good return considering the market conditions. And then these are my two calls that I've bought for XXII, given my long-term optimism. So if we go over to SPY, we're going to go ahead and sell some puts. So right now the market's trading at about 375. Okay, now what I really like to do is see if we can recognize any trades or any trends here in the charting. Any trends that'll help us kind of figure out what's going on. So I'm looking at the 1 day, 1 year timeline, and pretty much you can see the market's in a general downtrend here. Now if we go in and zoom in on the past couple months, we can see that even then it's continued down its downward trend. There's a small upward trend, but you can call that what they call the dead cat bounce, which is pretty much a small bull rally with a continuation of our bearish trend. And so what I like to do is after analyzing SPY, I like to sell usually 5% out of the money puts, and so that's exactly what we're going to do. I'm actually going to do also a credit spread. I go into detail on what that credit spread strategy is, but it's a great small account strategy that lets you put a far less collateral than what you would need on a standard put sell. But it is also more risky, so that's why I do like to go out of the money significantly in order to avoid that. So right now 376.88, right? So 376.88. We're looking at a 5%. So 5% is 1884. So we're looking at a strike price of about 358, right? So 358, and look at that, it already turned green. So it's already on its upward trajectory. Now Wednesday, let's go ahead and sell some puts on 358. Let's see what 358 is looking like. $358 gives us like a 95% chance of profit, so that's what I do like. Now this is Wednesday, and given that it's trending upwards right now, I'm gonna feel the need to do maybe like a 360. You know, we'll keep it in the maybe 90% return profit. I like to keep it between 90 and 95, so maybe we'll go right in the middle. Okay, so we're gonna sell a put, and then we're gonna go ahead and buy a put right below it. We may go even down a little bit. So we're doing, our max profit is $11. Collateral is going to be about $200. So that's what our max loss is going to be. So if we do 11 divided by 200, we're looking at about a 5.5% return, which is a phenomenal return. So I'll go ahead and do this. I'll go ahead and do 5 of these at 10. For $1,000, so $50 for $1,000. Now let's see if we can get these to fill. SPY is ripping right now, so it may be a little difficult. So I hate to chase trades, and that's the last thing you want to do, but you do want to remain flexible to your position here. So we had said 350. So maybe what we can do here is go up a little bit more in here. So we can do one of these, not buy, but rather sell a put. 360. Let's go a little bit more bullish here. Okay, and we'll do another 5 here. Put in some 12 for 1,000. And right now it seems like SPY's coming down a bit. We were able to fill that trade. Perfect. And so generally what I like to do is keep my position sizes to $5,000 to $7,000 per position. I think it's just a very kind of good rule of thumb to follow. So that's why I don't want to overexpose myself too much here. So here we're trading at 12. We've got an average credit at 12. I may increase this position a bit more. So this return right here, pretty much we got $60 for 60 to 62. So the way the collateral is calculated is it takes the difference times 100 because it's 100 shares per contract. So that's 362 minus 360. Got 2. So that's $2 times 100. That's $200 per contract, and we're getting $12 per $200. So that's about a 6% return, isn't it? So you're looking at about a 6% return on these credit spreads. So right now and that's why I don't like to go all in on that position, because you see how they're worth 14 now. So right now I can go ahead and open maybe another 10, another 5 more, 0.14, and we're going to go ahead and open that position again. And usually if it doesn't fill right away, I don't cancel it. I let it fall into that, right? So right now if it's 14, it's going to 15, right? So the question is, if we did 14s, why hasn't it filled yet? And the answer to that is because there maybe isn't that much liquidity. So that's why we want to wait, be patient, let them run into it. And you can see that our 362, our other position that we had originally, also filled. This one just filled. This one's up at 16. So maybe we'll open another couple of more of these. This one's just running up, so we'll do 10 more of, let's do 18. And this will generally continue to go up as the stock declines. And you can see that it's, let's do 10 here, and we'll do 16. As the stock goes down, contracts will increase. So we've got 10 credit spreads to open for, let's see here, this is at 16 and this is at 18. So we can cancel the 18 one. Now we've got 10 on the 362s, and then we've got 5 on the 361s. The 361s are obviously less risky. So let's go ahead and open a couple more of these. We'll do 10 on the 13s here. Okay, and then we just let this kind of run here. Now remember, each contract we have here is $200 of collateral. So right now we have 15 contracts. So we have about $3,000. So we have about half our position. We got another position here kind of waiting to be in. So we'll let that one run. And now let's go see what other stocks we can go ahead and see some general trends on. So right here I have my core position. These are the trends that the stocks that I usually follow. And look, one important thing to really understand with options is that while your strategy does decide if your stock is gonna go up or down. Your strategy has some exposure to that hypothesis, but at the end of the day, nobody can predict what's going to happen. And your job is not to predict what's going to happen. Your job is to be able to position your shares or position yourself most effectively for a movement in the market, right? And so That's the important thing to understand with options, is that you're not trying to predict if it's going up or down. That to you shouldn't matter. What you are trying to understand is, how can I position my money in a way where if it does go up or if it does go down, my money is still protected. And so that's really the key here. And look, we got this stuff, we got our shares here. So we have right now 15 and 20. We have about 35 contracts, right? So if we do the 35 times 200, $7,000 of collateral. So we can go ahead and leave this position alone. This one is right where we want it to be. Now remember, these are expiring on the 26th, so these are two-day ones. And we'll go ahead and I'll show you when I plug them into my Excel. We can see more or less how that runs, and I'll show you how I keep track of these trades. So the other thing we can do is, let's go ahead and see what O'Reilly, I mean, look, O'Reilly, wow. I had some 760s that expired on Friday. Look where it's trending right now. This stock is just absolutely ripping, right? And so what I don't like about O'Reilly is the volume. There's very low volume, so the next ones are November 18th. So that's really a month away. But if you look at, for example, the 760s, look at that. I mean, come on now. So that's why I'm not truly a fan of it. I do like to trade O'Reilly once we get a little bit closer. I'll keep an eye on O'Reilly. Let's go to, let's head over to let's see, what can we sell? I think, so generally I think you should have some hypothesis of what's going to happen this week. Generally I think the market will rally. I think GDP numbers will come in a little low. It's just going to reconfirm everybody that we're in a recession. You may see a small rally until then. So that's why I'm going to sell some calls, because I do expect that the second half of this week we're going to have a small correction. So if we were to look at TJ Maxx, right, and I think TJ Maxx is a particularly interesting stock because I think it's going to do very well during this recession. TJ Company looks pricey. I mean, it is a little expensive. Let's go ahead and look at the charts on TJ. TJ Maxx is I had a position where I didn't do so well on. So look, it's not doing too crazy. It does have a hard stop at the 68.53, 69. It has a good resistance. It's trading at the top part of the Bollinger Bands, which tells you that it's trading on its upper side of its usual trading patterns. It's trading above both of its moving averages, so it is very bullish right now. And I think that there needs to be some sort of realization that, hey, this is gonna chill a little bit, right? So I'd like to maybe sell a very small position above the $69. I'd sell a call. I do think it's going to be corrected. I don't necessarily think this is going to rip right through its resistance up here. I think it has a very good resistance built up. So let's go ahead and do that. Let's go and see what these. Let's go ahead and see what these option chains look like. I think it's given it's an update. I think it's a very good time to sell these calls. These are October 28th, so these will be the weeklies. And let's go ahead and sell them at, what are we, 68? I'd like to do maybe some 70s. Chance of profit, like I mentioned, I like to keep them above the 90s. If you do it above 90s, though, you can see how it drastically goes down after the 90%. So that's why we want to keep the premium healthy. So I think 71s, I'm going to do a very small position. We're doing 70, we're selling the 71 for 12, and then we're going to buy the 17, but that's not true there. I think the true price, $10 per 1,000. So let's go ahead and do maybe like 2 positions there. Let's do something like that. Credit. I should be receiving a credit. Remember, you got filled. What is that right now? We may increase this position a bit. We're going to keep an eye on TJ, see what's going on with it. I think 71 is a good place to be because it has a very strong resistance at the 69. And I think that once that GDP numbers come in, I think it's gonna correct this stock a bit. I'm gonna get a credit on this one for sure. Oh fuck. No, we're gonna open it. So let's go ahead and open one. You think we can do 15 on here? Oh, look, it's already at 16. Let's do 17. I think we'll get a 17 in there. And then let's do a 16. And this, again, this what it does is that it helps you average in your premium. Don't want to put too much into this one because this is a very risky play. TJ has been outperforming the market for quite some time now. You can see it kind of coming back down to 14, 15. So maybe we'll just go ahead and cancel this 17. And let's leave this 16 and maybe we'll do a 15 in there. We've got 2 at 10. So let's open one at 14 if we can, at 15. We'll leave one open at 15 there, and if it goes back up, we'll catch it. Okay, so now for TJ Maxx, 62, so that's $100. Let me see here. Between 71 and 72 is $1 times 100. Trying to see if it tells us here the collateral that we have on here. Let's take a look. Strategies. No, we definitely have strategies. Let's go ahead and catch a 14 and a 13. Collateral of 100. There you go. So right now we only have a $200 collateral exposure. This one I'd like to keep under 1,000 for sure. It's just a small little bet we're taking. 13. So let's let this one ride. Now let's go see what else looks interesting to us. Costco has been one that has been phenomenal to me. So let's go ahead and check on Costco. Costco's trading at $4.90. Okay, so let's go to Costco. Costco is a great place because it's a spot where even though they have membership fees, and that's usually where people will first start to cut during a recession, people do want the savings that come with bulk buying, and so it's and the gas, the cheaper gas, I think is a phenomenal amenity that they provide, if you will. But you can see here it's been on a general downward trend. I do see a very strong trend here that I kind of want to draw out so we can visualize. We have a trend coming down this way, and so right now you can see it's right at the top of that trend. It is trading below its trading averages, so I feel comfortable selling a call for here, and it's a great day to sell calls because it's rallying right now. And so right now it's at 489. What would be, I would do maybe like a 5%. Let's look at some chance of profits. Selling a call at maybe like a 90 here, 93, 515. So let's go ahead and sell that. This. So that's a max loss of about $1,000. We have $26 for 1,000. So that's going to give us a 2.5%. Maybe what we'll do is we'll do the the buy here at 520. So that brings it down to about $500, 15, $16 for every $500. Gives us a 3%. So it's a little bit more of a healthier return here. So we'll do one, and we'll just buy in at what the strike price, at what the market price is right now, and then we'll average in. But at least now we can start tracking the stock. Okay, so we went ahead and filled. Again, you want it to take a little bit of time to fill. You don't want this to fill instantly, because that means you left some money on the table. And I do have another video where we kind of get into a bit of the how to read the bid and ask prices, so that way you can get the most competitive price for your options. It's called the bid ask hack. That is generally important when it comes to low liquidity stocks, where you want to open a position. For these stocks that have a very high liquidity, it's not as important. But look, it's interesting. We just put in a one for 25. It's trading at $26 for at 26, but that means it was a low liquidity 26 trade, and it didn't even fill our 3 that we have right now. So that's why I want to leave these 3 here. I may open another 24 just because I like the way this stock is trending, and I do want to make sure I have my exposure. But I'll leave those 25s open, so that way we can go ahead and be positioned for the momentum to kind of give us that price, right? Now we do have Ford. Ford is doing very good. We can look into Ford. We also want to make sure you avoid any earnings reports. Zillow, we're going to have home sales reporting. I think the housing market is going to get crushed, and it's already. Look at just in the 3 months, Zillow's down almost 25%, 70% in the past year. I think it's going to continue to be hammered. We have a high of $29. So maybe what we can do is we can sell one that's a little bit more out in the money so we can collect more premium. But I definitely want to sell a call. And now let's just go look at the charts. The charts tell you part of the story. Don't always rely just on the charts. Look at this chart, man. This chart is absolutely crazy. Let's zoom in. We have a downward trend. It kind of broke the downward trend, and it's just been kind of continuing on the downward trend. We could sell one on our moving average, which is 33. We're not going to get a lot of premium just because $13. Could do credit here. So we're saying we're getting $13 for every 100. So that's a 13% return for a 2-week hold on Zillow not rallying. I don't think it's going to happen. I have very few. But let's take a little bit of a bigger position here. Let's do 15. So trade at 15 now. You see how we opened it up at 13? So now it's filling at 15. We could probably do 2 more at 15. Let's do 16. See if we can get 16 filled. I think given the interest rate horizon right now, very few people are really looking for home purchases, and I think that's going to affect the housing market. How many people are actually looking at Zillow for even houses to buy is very few, and I think Zillow just has a general cloud over its head as far as the market. So I think they're in a position to not profit much in the next couple quarters. I do want to open a small position. Now we're going out pretty not far, but it's definitely, it's a monthly. November 4th. So you're looking at a 2-week position. I do want to keep this position small. We have, so TJ Maxx didn't fill. 71, 72. 71, 72s are now at 13. So maybe we can open one more at 14 and then let's still just kind of review the others. We'll let those fill. Zillow, we put in an order for 16 and those are trading now at 14. So maybe we'll open two more of those at 14. And again, let's keep those position sizes small, especially because these are credit spreads. Credit spreads are risky, especially in Robinhood where you cannot roll them. So that's why you want to be particularly conscious of that max loss. Now, I do see that, let's see, what are we looking at? Palantir is still down, Oatly still down, XXII still down. Let's look at our Credit Suisse straddle. It's up to 118. I may exit this position. I paid $120 for this position. Pretty much at break even. I don't think this stock is doing much. I was counting on the October 18th announcement of the restructuring, but it seems like they're going to rally now. That rally may be in our favor, but even if it gets to the September number, our break even isn't that. And we may just hold on to that for a bit longer. We'll see what happens. It's an interesting play. So our Zillow call, yeah, we've got an open position fill for 16, right? Right now it's trading at 16. Yeah, so we may see that. We may see that fill. Hopefully it does fill. Huh? Did it fill? I think it did. Yeah. No, it didn't. We have 7 credit spreads. That's $100, so that's $700. We don't even have 1,000 in there yet, so I may do up to 10 contracts. Let's go ahead and do 2 more at 15 because we've got that 16 anyways. So let's let those fill. TJ, we still have one open at 16. It's at 13 right now. Got 5 contracts. This is 100. So maybe we'll do 2 at 13. Wow, that's come down very fast. So what are we looking at right now? We've got, I think we're doing pretty good. Costco, right? These are the interesting ones. Costco's got 5 credit spreads. We've got 24. It's trading at 22. This is a $500. So 5 times 500. That's where we're at right now as far as exposure. 2,500. If it goes above our 24 basis here, I may increase my position a bit, but right now it's really in our favor. I mean, we're looking at a 5% gain already. So we'll leave that one alone. SPY, what are we looking at here for the 2 days? This is at 12, so we're right at pretty much where we bought it. Hasn't done much. I expected that to happen. I may increase this 5 more just because I do want my exposure a little bit higher on this. I think it's a great play given the scenarios going on. Costco, we're at 21. TJ, we're at 12 at 11. So we're up slightly there. So Zillow's up to 15. And I don't understand. Did I put 15s on here? Yeah, I did two 15s. So this should kind of open here. We'll leave this here. So we still have about $12,000 to kind of deploy. Costco went up to 19. We got 24. So we're already up 22%. Let's just see what other positions we can take advantage of here. So one quick tip that I've gotten that has been wonderful to me is kind of have a group of stocks that you become very familiar with the way they trade and the way they usually react to news, and trade those, right? Because it's like having these stocks is like having a kid. You know how your kid's gonna react if there's something going on. Snow's an interesting one because Snow is almost cash flow positive. Doesn't even have a PE ratio. It had a 52-week high of 400, and it's trading now at 172, so it is making its way back. A lot of volume traded. Let's look at the Snow chart and see what's going on here. So it seems like it's on a small recovery here. I think it's going to trade sideways for quite some time now, but let's see what's going on here. So it broke its upward trend. I do see it's on some sort of downward trend, but not really. It's trading right at the middle of its Bollinger Band. I don't see any clear floor here. I do see it's trading right at its 60-day average, but below its 200. So it is trending low, or it's trading lower than its past couple months average. I think given the negative cash flow that we've got showing, I don't think it's going to break this high that it tested twice here at 197. So if I can get a decent premium on 197 or above, I'll go ahead and do this. And we're looking at let's do the 197, right? So if we sell a call and then buy a call here like this, this one we may, this one I'm definitely going to do October 28th. So we said 197, right? We're looking at a $5 premium for $300, pretty much. For 250. So that's pretty much a 2% return on our collateral. But it's a pretty interesting bet. So maybe what I'll do is I'll go a little bit lower on our strike. So we said 195. Maybe I'll do it right above our moving average, our 200. I mean, the thing is, it's got a really nice resistance here, right? 190. 197. These 200s look pretty fucking good right now. Sorry for my French. So you know what I'll do? I'm going to do some November 4th 200s. We're going to sell this call. And then I'll buy the... So we're getting a $75 premium for 1,000. So that we're looking at a 7.5 return. I think that's a very safe bet to take. I'm going to go ahead and lock that one in. Let's see if we get it filled here. I don't know what the liquidity looks on something like that. just out of curiosity, let's look at what. I mean, this stock has pretty much been trading sideways here, so that's why I'm not too. We placed this. Let's see. I want to see the same 200, but for this week. We're looking at 20 cents. Yeah, sometimes you see that. Always want to receive a credit. No one have to pay for these bets. You want to get paid for these bets up front. You're the house. You know, you are the casino. And again, I hate making that comparison to a casino or a gambling house because that's not what it is. But in a way it is, you know, but the thing is that the odds are in your favor. 60 to 70% of people that buy options, they expire worthless. So that means that 60 to 70% of people that write options collect premiums. And that's really what you want to keep in mind. So that's why you want to position yourself very favorably. Don't get greedy. You know, you're not going for that 10, 15% return in a week. I mean, that's ridiculous. But if you do that consistent 3, 4, 5% a week consistently, remember your money's growing. So you're monetarily, you know, on a $35,000, let's say I was fully deploying this capital every week at a 3% return, that's $1,000 a week, you know. Let's say you had $350,000, that's 10 grand a week. So it's just, remember, it's about scale, not about return. All right, so while we have these credit spreads open here to see if they fill, let's go ahead and monitor where we are. I'm gonna take a quick break. I gotta go to the bathroom. And again, I want to make this very clear. Trading options is a completely different mindset than trading stocks. When you're trading a stock, you are betting on it going up or down, period. If you're buying it, you're obviously betting that it's going to go up. If you're selling it, it's because you think it's going to go down in the future. The difference with options is not necessarily on if it's going to go up or down, but how much is it going to move in that week. And you want to position yourself outside of that movement and position yourself at a price point and at a resistance point where you know, or are almost as certain as you can be, that you will collect that full premium. So we still have about $10,000 to deploy. Now again, the whole point is not to deploy everything at once. You know, some days are more favorable than others. Maybe you want to increase one of these positions that you have here tomorrow because the price of the contract went up, but you're still very confident on your strike price. So that's why it's very important for you to just take it slow. Now this credit spread here, we did 8, and then this one we're doing at 75. So let's go ahead and replace the 75. Maybe we'll do a 70. Oh wow, it went down to yeah, it's down at, let's do 70. Maybe we can get 70 filled. Cool, we got filled at 71. This one, we're looking at 8. What is this trending at now? You see, that's the weird part. It's trending at 8, but it's really, it was saying 10, right? Let's just go ahead and just let this one fill. We may have to wait for snow to rebound a bit. Now let's go ahead and now the good news is that it's generally good news that these haven't filled. And the reason for that is because it means that the contract price has not increased, which means that you want these eventually to get to zero. That's how you keep your full premium. Let's monitor our trades right now. We've got SPY. SPY's going at, they're trading at 13, we're at 12. 361s. Do we have any more available of those? No, we don't. You know, I may open 2 more at 13. And again, remember, these contracts, given that they expire so close, the time decay on these are incredible. Meaning that simply by holding them until tomorrow, a large part of that value is going to be eliminated. So we're up, down 15%. It's kind of flinging between 12 and 13. So we'll let that one go. I put in a credit spread to open at the 13. We'll see if that fills in. I mean, it's at 13 right now, but it hasn't filled. So technically it's not there yet. Our 362s are trading at 15. We got 14.50 for them. So we'll let those be right now. I'm not worried about them right now. Costco's trading at 18. We got 24 for these. So we're already up 26% on this stock alone. Now this is a small position. I mean, this is 5 shares with $5 of collateral. 5 contracts, I'm sorry. So that's $500. So this is a $2,500 exposure. That's usually how I like to keep it. I may do a naked put. Naked puts are just simply straight puts. They do take a lot of collateral though, but they're very safe. They're safer than credit spreads because you can roll them. So we may do it on Ford. Let's see what Ford's looking like. So Ford kind of had a rally there and it's coming back down to its base here. What I do want to see is what this low was here. It was a low of 11.01. So I'd like to maybe sell some puts at 11. Let's see what those look like. And you see $27 for 3,300. It's not a very good return, right? And that's because you have to put the collateral up of the full amount, which is generally what you have to do. The credit spreads just help you reduce that. You're not even looking at a 1% return here. So if we can get this 9, let's see, it's trading at 9 now, so that means we're doing 27. Oh wow, 27 is with 9. If we can do 10, I mean, I'd like to at least get a 1% return here, you know. I mean, it is for 1. 1150s are pretty close. That's what I don't like about them too much. Let's see if we can get filled at this. I don't mind taking this bet. It's just a good place to park your money pretty much for the week. So 1%, look, seems like it filled, right? I'm down to 7,000. It hasn't filled yet. Maybe we can take another naked position. Now Oatly, right? Oatly's a very interesting one. It's at $2. I am down on this position about 14%. I only put a small amount of money into it, about $1,200. This is the risk you run on doing the wheel, which is your underlying position loses value. It's not entirely bad because if you're able to wheel it for a couple weeks, Doesn't really matter as long as you're able to keep your shares. But let's see, if I was to do a put sell here for November 18th, so it's a month away for $2. I mean, yeah, that's looking at 20 right now. Dollars are. This option chain is a little weird. I'm not a fan of Oatly. I do follow this guy on YouTube who trades Oatly a lot, so that's why I got into this position. Very small, 600 shares at $3. Sorry, 600 shares. I think I bought in at 220, 230. So it's not. I'm not worried about it. I am a big drinker of Oatly, you know, and one of Buffett's rules is trade what you use. You know it. I know Oatly is the #1 brand when it comes to oat milk. I know people are trying to. There's a general trend moving away from dairy products, and so I think this is a phenomenal option long term. I may increase my position, to be quite frank, just because it's such a cheap option. I mean, stock right now. It's trading, I believe, at its 52-week low, 199. 56% rating of buy. So I may buy a couple more shares. Maybe I'll buy another 200 at 201. See if I can get him. 202. That's fine. And what I'll usually do is I'll wait for this to rebound a bit, and then I'll sell some calls on it. My total position size on this is 800 shares. So it's about I may do 1,000. I just want to wait till it, you know what, maybe I'll do 100 shares, but I'll do it right at 2. Let that kind of move into that fill. I like doing that. Puts, let's see, none of these are really filling, which is good. Costco's at 14. Yeah, we're up. Wow, look at that. Phenomenal play here. TJ Maxx is at 10, 20% up on those already. And my general rule is if the contract is already at 75% plus already of profit, I usually just close it out. There's no need to really wait till the end. Unless you want to. I mean, it's these are all strategies. This is my own personal strategy. Let's just do five of these at 0.08. Jump around here. There we go. That's fine. Now, is it really trading at 9? I don't think so. I try to open it at 9. Now we've got about $4,000. Now, what I'm going to do is I'm going to leave those in my back pocket and just monitor my trades. Right now we're down about 0.5%, 1.5%. Keep monitoring these trades. Maybe these will fill in, so we'll let these kind of run. And now, what I generally do now is I go ahead and input these trades into my tracker. And I'm going to do a video of this. I have a video of this. I'll go quickly through it. I'm going to do just one of the options. I'm not going to sit you through here through all of them. But it is very important for you to track your trades because you're able to see when you make your best trades, what time you make your best trades, and you start to see trends. And if you don't track it, you can't control it. So that's why the most important thing to do is to track. So first thing I do is I go ahead and input my trade into my Excel tracker. So pretty much it's a two-page Excel. I track here my weekly percentage performance and then my overall portfolio performance, any deposits or withdrawals that I've done. And so here I kind of cover what strategies I've done, what stocks I traded, how many trades, because for example, one of the trends I've seen is that the less trades I make, the more money I make. So here I did 10 trades, I only did 0.27%. But you look at 5 trades, 10%. 7 trades, 12%. 1 trade, 4%. So it's you start to see some general patterns. So that's the first thing I do. This is mainly just at the end of the week. So I'm going to leave this week here as open. I haven't filled it in yet. Now the other one is really more specific to the actual option. So here I put in when it was traded. So today is 10/24. Let's go ahead and input our SPY position, and I'm not going to go through all of them, but I do want to show you what I generally do. And if you want, leave me a comment in the comment section. If you want me to send you this Excel, I can send it to you so that way you can continue tracking your own trades. So for our SPY position, we're going to go ahead and input it here. So let's go ahead and do ticker. And let me go ahead and just copy the formatting on this. So ticker SPY. This is a put spread. Expiration date on this particular one is 10/26. So it's a 2-day contract. Strike price. Now when it comes to strike, you always put your short leg. Short leg is really the one on the shares, on the contracts that you sold. Those are really the important ones. The other leg of the spread is really a hedge for your collateral, and in case it continues going above, it maxes out your max loss. So the important one is the ones you sell. So that's what we're going to type in 361. Stock price when we traded, right now it's at about 373.54. So it's about 3.5% from the strike price. Chance of profit on this trade. Now this is why it's important to do it right when you make the trade. But let's go ahead and see the 361s. So the 361s have 89.50% of profit. Okay, and we're looking at 361s. These have increased to about $17 in premium, so I may increase 16, 17. So now, premium per contract. The average premium per contract that we have here is roughly $12.57. So $12.57 per contract. Number of contracts, we have 21 contracts here. So that means that we've got profit at open. We have about a $264 premium to be gained here. And as a matter of fact, I'll put here more max profit, because this is the max profit you'll get if they all expire worthless. Position size. This is really the collateral, right? So this here is 59, 60, 61, so that's $200 per contract. And then we've got 21 contracts, so it's about a $4,200 position. And so we're looking at a 12% of my portfolio and a 6.5% return on collateral, right? Exit contract cost, this is if you sell it before it expires. Exit executed, this is, we'll check this, but it's essentially when it actually expires. This is how many days you held it, but we can only calculate that depending on what happens. And so that's pretty much it, right? And so here we're able to track that trade and see what happens. And then the other thing that I do, which helps me kind of visualize these trades, is I go to a website that is great at tracking trades and visualizing them, and it's called Option Strat. I think this website is amazing. I can go to all my saved trades right here, all my expired trades. It tells me, you know, what I've lost, what I've made. Very, very cool. So I'm going to go to the bear put spread. I'm going to input this SPY position here. So it already has SPY here, and this SPY position is for, and this really just helps you kind of visualize it. I have a video, if you want to check it out in my playlists, that specifically goes through all the features and how I use this particular website. But it's very cool because you can play with the implied volatility, the chart range. So we'll go ahead and input our short leg is the 361 put. This is our sell. So we go to 361, and here we put 21 that we sold with our average price of 46.05. So now we locked in that short leg. Let's jump over to the long leg here. 359. We bought the 359s. So that's 21, and we paid 33.48 for them. So this right here is our position. We put $4,200 of margin. Oops. $4,200 of margin, which should equal. Yep, so we've got $4,200 of margin. Max loss is $39.36. Now again, I don't necessarily, this is a max loss potential. So that's why you have to be very clear, and these credit spreads are high risk. We have a break even here, unrealized gain. And so here is pretty much the buffer, right? And this is what determines your risk. So essentially the stock, if it moves up, you are good. If it continues to move down, 1%, 2%, 3%, 4%, so you're pretty much at 3.8%, you're still making 100% of that premium. So the question you have to ask yourself is, in 2 days, what are the odds that SPY, the biggest index in the stock market representing the top companies in the US market, what are the odds that in the next 2 days it's going to fall 4%? And again, it could very well happen. But what are the odds? And are you comfortable with those odds? And this is how you position yourself. So now that I have this saved here, I go ahead and save my trade. And then that's it. Now you can go ahead and track it. I can look at how we're doing. It's a very good option for you to visualize your trades. So having said that, I'm going to go ahead and let you guys go. Go ahead and continue doing your trades. I wish you the best. Looking at our trades so far, it seems like there's still a couple to fill, which is good that it hasn't. Again, that means that contract values are going down. SPY's at 12, 15, 19, 9. You know, the one I do want to look at before I go, oh, it seems like our Oatly filled at 1. And you know what, I may actually increase this one last time, so that way I have the $1,000. So we have 1,000 shares. And I'm going to sell. I only have 6 Oatly calls sold. So I'm going to wait until this is a green day and this Oatly rebounds for me to start selling and wheeling those shares again. Now if you look at Oatly, it's pretty much in a trance here. Did break the resistance. It's trading at its lower Bollinger Band. Does not have much volume here. It's going to be an interesting trade. Let's go ahead and see what happens. We have about $4,000 left. If you look at that on a return percentage, that's about $120 left of premium that we could squeeze out if we want. I do like to keep a small fluff in case we need to close out a position, but it's not generally needed. Alright, wish you guys the best. Have a good one. Alright traders, that's it for today. I hope you learned the basics of option trading. Please subscribe, like this video. I will be putting more content out on what is next.